Welcome back. You're watching Midcap Radar here on CNBC TV 18. Let's get a corporate conversation going. And Satin Credit Care Network received a credit rating upgrade from A- stable to A with a stable outlook from ICRA for its long-term bank facilities, subordinate debt and NCDs. To discuss this and more, we have Mr. H.P. Singh, the Chairman and Managing Director at Satin Credit Care, who's joining us this afternoon. Mr. Singh, good afternoon. Thank you so much for joining in. I'd like to start off by asking you what are your cost of funds currently, and how is this rating upgrade expected to benefit your cost of funds? How would they benefit from this?
So technically, I think, we are at about 12.5% in the terms of cost of funds. I think this rating upgrade actually will lead to maybe a drop in the cost of funds. And without compromising on the net interest margin, I think we'll be able to pass on any drop in the cost of funds to our ultimate borrower. So which will also bode well for our ultimate borrower in terms of this rating upgrade as such.
Okay, so Mr. Singh, is there any amount that you have in mind in terms of the benefit that you'll see in cost of funds?
See, we are not very clear right now. It'll depend on bank to bank. We have a lot of lenders across, across the whole spectrum. So we will look at it how it probably pans out to be. But definitely, yes, I think there would be a positive emergence out of this rating upgrade, and definitely this is a positive sign even to the ultimate borrowers as such.
Since you mentioned bankers, Mr. Singh, who are the bankers to the company? And part two of my question is, with this additional risk weight assets on bank borrowings or bank lendings to NBFCs, how would that impact your cost of funds?
So we've got a large list of lenders, the PSU banks, the private banks, the foreign banks, even DFIs from abroad, basically, which are there. So, it's a whole list of lenders. But definitely this will have a bearing on the cost of funds, definitely, yes. In terms of the risk weight, if you would note, the risk weight exempts microfinance and housing finance loans as such. So this will not have any kind of an impact in terms of, the liquidity which we'll get, in terms of even across the board, the cost of fund which will be there. So definitely, yes, it's again a very positive sign that for financial inclusion or for microfinance, this is exempt in terms of the risk weight for from our lenders.
Okay, all right. So this rating upgrade has come in as a positive event for the company. So let's talk about business in general, Mr. Singh. You did say that cost of funds declining will not have an impact on net interest margins. Generally, how has Q3 been in terms of disbursements? Has it been better than what you saw in Q2?
See, definitely what happens is Q3 and Q4 are probably the best quarters which we have in the entire year as such. We've given a guidance of 25%. I think we're on course to achieve that. And we look forward as per what has happened till September. I think we've been on course to do that, And as I said, the last two quarters are definitely, much more better than the previous two quarters, which are there. Definitely, I think we will be able to achieve our guidance, both in terms of our disbursements as well as our guidance in terms of our ROA, which is again projected at about 3.5%.
A word on your AUMs, Mr. Singh. How have they been in this quarter? What is the outlook going forward? And can you please also elaborate on what segments are driving this AUM growth?
So, what we have, 70% of our disbursement is to the agriculture and agriculture allied sector, Over there, because of, the normal monsoons, because of income generation, which has happened across there, the Kharif sowing acreage has probably been stable and fair. We are looking at an uptick in terms of our demand. So this is where, our focus always is in terms of microfinance. For our subsidiaries of housing finance as well as for MSME lending, they look at, various other segments of affordable housing as well as the MSME lending as such. Again, the pent-up demand in the rural sector is coming across from there. So I think, what it actually looks like is that we were at about 10,000 odd crores in September quarter. I think, we'll be looking at that growth also in terms of the guidance given, which was about 25% plus.
Okay, all right. So you stick on to your guidance. Mr. Singh, you did say this time that rural demand is growing. This is something that you had alluded to the last time we spoke as well. What about asset quality? Is there any issue with asset quality in the rural areas? How do you look at the asset quality, the NPAs going forward?
See, they're again very stable after the COVID impact, which was there. The NPAs during the COVID had gone up till about 8% or so. Right now, we are closer to about 3% odd. So that is where we are there. This will remain practically stable under the radar. The industry talks of a credit cost of about 1.5% to 2%. I think our guidance is also within that same range as such. Because what is happening is because of the demand coming in, because of growth which is happening across over there, because of income levels which are fairly stable and fairly okay. I think we're looking at stable credit costs coming in. There's not going to be any uptick in terms of that. And this is where we are looking at. Closer to about 2% credit cost, I think, is what we are looking at as the industry, as well as for ourselves, how we move forward across.
Right. One final question from my end, Mr. Singh. Are there any top-up loans in your AUM growth that you can allude to? And part two of my question is, do you have any fundraising plans in the next 12 to 18 months?
So we just finished our QIP, which will actually take us for the next, I think, maybe a couple of years. That is what we really look at, unless until the growth really gets, much more than what we have given our guidance for. But this also, QIP has been for our subsidiary equity funding also, which is there, We don't do any top-up loans, and let me make it very clear that there is absolutely a zero top-up loan, which we give. It's just one loan per borrower, which we give. There's no extra loan which we give to our ultimate borrower.
Okay, all right, Mr. Singh, thank you so much for joining us with all those details. So the street seems to like the rating upgrade that has come by for the companies. The stock is higher in trade today, and the fundraise that you spoke about as well. Just a while back, you raised funds via QIP. The stock higher by 1.5% as we speak. Quickly, let's take a look at the markets now because they continue to do well. We have 90-point uptick on the Nifty, 103 points on the mid-cap index, and a couple of these stocks which are doing really well. The chemical theme seems to be working today as well. We have the agrochemical stock Sharda Cropchem, which is higher by around 7-odd%. We have something like a Fine Organic as well, up around 3-odd% as we speak. RT Pharma is the other one, which is up around 3-odd%. So pharma and chemicals, this is a theme that seems to be working since last 2 days. We'll have to see whether that continues or not. But yes, this is something which is working in the markets right now. We have something like a Brigade Enterprises, Gland Pharma, all of them also up around 5-odd%. But we'll do one thing, we'll slip into another break. When we come back, we'll put focus on another chemical name, Vinati Organics. This is a special segment, Mid-Cap Spotlight. We'll tell you more about it. Stay tuned.
CNBC TV 18, embarking on a quarter century of excellence.